think we're live. Let me check. Let's check if everything's working, the links and everything. Let me share those links and let everyone knows that we are live from now on. We are live, guys. Jump on now. Yes. Okay. Looks like everything's working. My internet's good this week, which is amazing. Just gonna post that on my socials as well. Live now on YouTube. And there we go. All right. Welcome everyone who's jumping in right now. I'm just gonna give like a minute or two for everyone to start connecting. Just step in the chat. Whoever is here with me, just step in the chat. Your name. If you have any questions about trading, if you're new to this space, welcome. Today we're gonna talk about risk management and a few other stuff as well. So risk management is probably one of the most important things in trading. Okay, so we're gonna have some fun talking about risk management. We're gonna learn concepts like risk-reward ratio. We're gonna talk about the best strategies that we can do to preserve our capital and in the same way grow our trading account, because that's basically what risk management is. Okay, so risk management is like a coin with two sides, and one side you need to protect your capital, on the other side you need to grow your account. Hello Rafael, welcome my friend. You're always here with us. Thank you so much for your support, brother. Means a lot. And yeah, so basically risk management, let me just grab a space here. Risk management is like two sides. In one side you want to have I would say capital preservation. Let's make this very big. Yeah, capital preservation. On the other side you want to have capital growth, right? And in the same way of a coin, when you want to preserve a capital, it's very hard to have growth, right? So you need to find the balance where you can grow your account and at the same way you are preserving your capital. Okay, so you don't want to go risk too much in one trade. You don't want to go and go all in one trade and gamble the whole money of your account away. And also you don't want to risk so little that you cannot even make a considerable amount of money that can pay for your bills and stuff. Hello Laura, welcome. Laura Marin, welcome. Yeah, so today let's talk about this because I think risk management is key if you want to become a successful trader. If you want to become a consistently profitable trader, you have to understand these two concepts, okay? Risk management and how can we grow your capital and at the same time we preserve the capital. Let's talk about that right now. All right, so I think I've gave already 4 to 5 minutes for people to jump in. I can see some people is here online already watching this. So now let's jump to the markets and let's start understanding how can we apply those sort of concepts. Okay, for those who are really beginner, and if I say something that you don't understand, just make sure to ask the question in the chat so I can repeat whatever I said, and I can explain again to you guys. Okay, I'm here to help you out. Yeah, so today let's just do this. Let's pretend we have a trading strategy right now, and this trading strategy is very simple. What are we going to do? We're going to flip a coin, and if it comes heads, we're going to go long at the start of each day, and we're going to close the position at the end of the day. If come tails, we're going to go short at the open, and we're going to close the position at the close. Okay, so let me open up here and let's say a coin flip. Okay, so here's the coin flip. I'm going to play with the replay mode here. And for those who are beginner, you probably heard about never risk more than 1% of your account in one single trade, right? I believe you guys have heard that. If you are a beginner, that's a very common sort of advice that we give for beginners. And why is the advice so important for you who is starting right now? Because if you risk just 1% of your account in one single trade, the probability for you to blow up the account in a strategy like this one, we're basically gambling here. We are basically gonna flip a coin, and whatever comes, we're gonna go long or short. We are using zero technical analysis. We are using zero knowledge about trading. Okay, kid, 5 years old kid could play this game with me and could trade. All right. So why it's important to risk no more than 1% of your account when you start trading? Because the probability of you blowing up an account, even with gambling like this, is very, very small. It's nearly zero. I'm gonna put the number here. I have this number here somewhere. Oh yeah, I got the number here. So it's 0 point. All right, let me see if I can guess that many zeros right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. No. I lost. Yeah, I think it's something crazy like this. 7, 8, 9. That's the percentage. That's the likelihood of you blowing up an account if you risk 1% on each trade. I think there are more zeros, but you get the point. It's nearly impossible. So when you're starting, obviously you want to go to a demo account, and I'm going to show you guys how to open up a demo account here on TradingView for free. Okay, you can just open up a demo account and start practicing. But once you feel comfortable on the demo account, when you feel like ready, okay, I'm ready to go live and start trading real money, do not risk more than 1% in one single trade, because look at the chances of you blowing up your account. It's so small. So you can start with $100 account or with $1,000 account, and if you just risk 1% per trade, you definitely not gonna blow up the account. I would bet you will not blow up the account. Even if you're a really bad trader, even if you play this coin flip coin that we're gonna play right now, which is basically like a 50-50 game, okay? You would not blow up the account. So make sure when you're starting, do not risk more than 1% in one single trade, okay? After you go through the demo account stage and you are ready to risk real money, just follow the rule, okay? But when you are advanced, obviously you want to go for that capital growth and at the same time capital preservation strategy that I'm going to show later in the video. So for now, let's just play this game for a little bit. And here we have this daily bar, and again, if comes head, which is cara in Portuguese, we're gonna go long. If it comes tails, we're gonna go short. Let's play that game, and that means we're gonna go short. So right now we're gonna go short in here, and we're gonna close that trade on the next bar close. So right now, look this, interesting. We made a little bit of money here, Okay, we made a little bit of money. We made about, what is this, 0.19%. Okay, we made 0.19% on that day, so we made some money in here. So we made 0.19%. Okay, and then we're gonna play the game again, and then that means that we're gonna go long, and then on the next bar we would go long, and luckily we would have made like 3%. Okay, so you can see that even if you play a game like a coin flip and a strategy like this, if it comes tails you go short, if it comes heads you go long, it's gonna be pretty hard for you to blow up an account, because sometimes you're gonna get it right, sometimes you're gonna get it wrong, but overall you're gonna be 50-50. Okay, and now that you understand the sort of probabilities, and you understand that if you risk just 1% of your account per trade, very hard you're gonna blow up the account, I think you're gonna start feeling this sort of like confidence that you can actually be okay and not be emotional on the trades that you take. Okay, so start implementing the idea of it's safe. Don't feel afraid of risking or entering a trade because you can lose that money, or don't feel the urge to risk more because you think, for example, oh, I think the next day is gonna be bullish, so I'm gonna risk a little bit more than 1%. Don't start playing with the mind game, okay? Just make sure you follow the strategy and you follow your risk management rules, okay? So until you get in a very advanced level, just stay on the very basic game. Risk 1% per trade, all right? Risk no more than 1% in per trade, and make sure you follow your strategy. Make sure you don't care where the market is going, okay? And you should be fine. So after when you understand that, and when you feel confidence, and then when you see that your results are starting to improve, then we go to a more advanced sort of strategy and risk management rules, which is, now I'm gonna change the game a little bit. I'm gonna put a moving average, exponential moving average here. Okay, and let's make it let's say 50 daily moving average. It's a very common moving average. Okay, and this strategy, it's a little bit different. Now it's not gambling. Now you are basically gonna go long or short when the market breaks above or below the 50-day moving average. Okay, and obviously you want to back test that to make sure you are profitable on that strategy. But let's say, for the sake of this example, it is profitable, and basically when the market breaks above, we're gonna just wait the market to come and test the 50-day moving average like this one, and we're gonna buy on the close of the bar. We're gonna put a stop below the bar, and then we're gonna go for 1-to-1 risk reward. Okay, so in that case it would be a profitable trade. Okay, and then once that happens, you need to like kind of wait the market to go away and then test it again, like here. You know, let's say you go long here, put your stop there, your target would be there, and this one you would be stopped out. So now let's play this strategy for a little bit. So now the market went up. So now we're waiting the market to go back to the 50-day moving average, and we're gonna go long. Okay, so in this case here, the market touched the moving average in here. Okay, so let's say that bar was the bar that we enter. This is our stop loss, and this is probably our target. Let me just put it this, I think it's gonna be better. And 1-to-1 would be right there. Okay, and in that case we got stopped out. Now what are we doing? we are basically doing the same thing. The market breaks below. Now we're just gonna go here and then we're gonna short there because it touched the 50-day moving average. It's a nice bearish bar there as well. Our stop it's above the bar, and our risk reward is here. That's basically the 1-to-1, and that one paid. Okay, that one was profitable, that one was loss, kind of break even, right? Now same thing here, you know, we move up and then go back, touch the 50-day moving average. Our stop would be like below this bar, and then our 1-to-1 would be there, and on the very next day would be profitable. All right, once you perfect this, you master this sort of a strategy, and you understand what's a good setup and what's a bad setup, you can start now doing what the pros they do, which is they bet more on the trades that have a higher chance of working, and they bet less on the setups that has a lower chance of working. Got that? So for example, let's say now I have the hindsight bias, okay? But let's say that when we are here on this market and you see a sort of topping pattern forming, buying here at the 50, it's very bad. There is a trend line here. There is a break happening. You don't want to be buying after breakout of a topping pattern. Therefore, in here, a very advanced trader, a pro trader, would not go long, would probably pass on the trade, or probably would bet very, very, very little, okay? Very small bet, because they know it's not a coin flip anymore. That long would have probably 10% or even less chance of working. Why would you bet on something that has such a lower probability? And remember, we are on a 1-to-1 risk reward. Therefore, we need at least 50% chance of working for us to make money. Hello, Fede. Welcome in, my friend. Welcome in. So if you don't have at least 50% chance, we should not take the trade. Okay, because again, we are using a 1-to-1 risk reward. So we need at least 50%. And there, guys, it's a little bit of maths, but it's not too complicated. I'm just touching a little bit on a concept called expected value. If this is too advanced for you, I recommend you to do some research online. There are some amazing research papers and websites and forums that explain about expected value. My course also, there is a chapter in my course about risk management where I explain expected value and all of this in more detail. You can buy a book as well, trading books, a very good trading book, explain this as well. So, but don't complicate too much, okay? I'm gonna play very simple, but if you have any questions, please ask in the chat. I'll be more than happy to explain again in a different way. But what I'm showing here is that this trade doesn't have 50% probability of winning. If you are an advanced trader, you would know that. Therefore, you would probably pass on the trade because you are on a 1-to-1 risk reward ratio, okay? So this trade here, I think it's more likely to work. It's more likely a 50-50 because again, like we have some sort of extension. The market now becomes bearish because again, now we are making a low, lower low, right? Lower high here. So maybe this is the lower high. So we have a high, lower low, lower high, lower low, lower high, okay? So maybe the market could really react bearish from that moving average. So that's definitely, that setup is definitely better than this setup. There is no topping pattern here, okay? All right, this one also much better than that one. There is no topping pattern here. The market actually now becomes bullish again because it formed an inverse head and shoulder. We break the pattern, so now we made a high, higher low, probably a higher high, something like that. So It's a better setup. Okay, so the pros who understand technical analysis will know this and will probably bet on those trades much more than on this one. Therefore, they would make a lot of money on those two and probably lose very little money on that one. That's when we start touching that concept that I explained in the beginning, where you start growing your trading account and at the same time you preserve your trading account, because you're not losing money on silly trades and you are making a lot of money in a very good trades. For those people who play poker, I would say this is your pocket aces. When you have a pocket aces, you have 80% probability of winning. So obviously you want to bet all your chips. You want to bet everything. You want to go all in with pocket aces pre-flop, because you know you have 80% chance of winning. If you do that 1,000 times, you're not going to lose money. That's trading. Okay? If that was too complicated, let me know in the chat. But that's basically trading. You want to know when you have a higher chance of winning so you can bet bigger on those chances. And you want to know when you have a very small chance of winning so you can pass on those trades, on those rubbish trades, or risk very, very small amount of capital. Okay? And this concept is called expected value. So you want to find good expected value trades and you want to pass on the bad expected value trades. All right? Okay. How am I going so far? Let me know in the chat if you guys have any questions, if you guys are understanding this. I know I'm speaking a little bit about patterns, about a little bit advanced here, but just so you understand how the pros they think about this. And again, if you are a very beginner, if you're just starting out, remember, go to the demo account first, and let's open up the demo account now actually. So go to the demo account, which here on TradingView, you can basically just click on trading panel and paper trading. So it's a simulator by TradingView. You click paper trading, you click connect, and there you have it. They give you $100,000 account of fake money, and you can just basically play the game I played if you want to. So let's see what comes. Tails. So we're gonna go short. So we're gonna short this, and on the next bar we're gonna close the position. That's it. And then that one was basically a break-even trade, right? So let's flip again, and now we're gonna go long heads. So we're gonna buy here. Oh, we made $198 actually in the last one. And next bar, ooh, we lost 1,300. So sell. Okay, and then it should be appearing here. I don't know why it's not appearing here, but it's showing here like the profits and losses. Okay, let me see if. So for example, if we went short there and we are making 5,000, you can, let's say, flatten, and then the P&L would appear here. Okay, for some reason it's not showing down there. It should be, but maybe it's just a bug from TradingView. Okay, but again, you can practice on the demo account any strategy you want. You can practice the moving average one. So let's practice the moving average one. So now that would probably be a stop out, right? Because it would be short there. But probably it's better to play like this on each bar, because see, the bars actually. So this bar that's gonna touch this one, we would go long that, and our stop is below the bar, you know, and we're gonna go 1-to-1. Oh, yeah, that bar touches the profit, but the problem with this is that we cannot close the position on. We can only close the position on the closing of the bar, which is a little bit annoying, but it is what it is. But either way, you can still practice with this demo account and with this replay mode on how to open up the... Oh, now I understand why. Now I know why. It's because this replay mode actually doesn't go here, because this is for the, what do you call it, for the live trades actually. So we actually need to go live. So let me close the replay mode. So now that we are live, let me go to 1 minute chart, for example. I think now if I buy, let's see, trade, sell 1 Bitcoin, and then I want to sell market, and see, create a new order, market, and then let's sell here. Yeah, so there we have it. See, I'm gonna do that again slowly so you guys can understand. Yeah, I'm in a replay mode. I realized later. Hello, Rao. Welcome, brother. So now you're testing that, which is great. I think, man, it's free. This is amazing. You know, you can test your strategy, you can play around. It's fake money, you know, zero emotions. You know, look, we're making $18. We make $22. Yo. Well, we make some money here. So you can basically just, let's see if we can click here, close the position, boom. Oh, look at that now. We made $26. And now we have the alert down here, and we have the order. Amazing. I love it. I love it. I think it's a great platform. And if you don't know about how to use this platform, I have 2 videos on my YouTube explaining how to use it. It's free. You can pay as well, but you can use it for free. This one that I'm using here is totally free. And you can do all of this stuff, which is amazing. You can do a replay mode trading for back testing. You can use a paper trading to as a demo account to practice your strategy. And then once you are ready to go live, you can just put $100, $1,000, how much money you can afford to lose, and basically risk 1% per trade. And as I said, you saw the many zeros that there was there. It was like nearly impossible to blow up your account risking 1%. Even if you play heads and tails here and just like gamble your money, you're basically not gonna lose that at all. Yeah, so again, if you are starting to get more advanced and you started to understand your strategy a little bit more, which is very common after a few months, you start getting a strategy and start getting consistent. You start showing some results. I think Rafael, who is here, he's starting to show some very good results. Fede as well. He's starting to show very good results and analysis on his trades. And those guys are studying trades for a few months. And after a few months, when you start understanding what type of setups you are very good with, you can start risking a little bit more than 1% per trade, because you know that you have a higher chance of winning on the next trade. And then basically you can grow your trading account at the same time preserving your trading account. For example, I'm going to show you guys a trade that happened today on Ethereum. If we go to 1 hour chart, this is going to be a little bit advanced, but bear with me. This here, it's a pattern that we call head and shoulder. This would be the shoulder, this is the head, this is the other shoulder. This here, it's what we call the neckline. Okay, so imagine this is a shoulder, head, and a shoulder, and this would be the neckline. Okay, there is a higher chance of the market going up than down when we break the neckline. Okay, and this trade was an amazing trade. The probability of this move up happen was much higher than 50%. Right? So basically here, if you're betting, if you're buying on the break of this neckline, you are basically the casino, because the casino doesn't care how many people play the games, how much money they bet. The casino knows that if they're open up 24/7, they're going to be making money. And this is the sort of trades that I call you are the casino, because you have a much higher chance of winning on that trade than losing. And these are the type of trades you want to take. These are the type of strategies you want to have, so that when you see a trade like this, you can bet and you can buy and basically make money on that move up. Okay. And there are many confluences on that trade, meaning there are many things that was telling us that the market was ready to bounce with the head and shoulder. You want to see a head and shoulder after very extension move down, which you had, because now you have what? The mean reversion on your side. Because the market, again guys, the market doesn't move straight up or straight down. The market moves in waves. Okay, in waves. As you can see here, we had that wave up, and then we have wave sideways, and then we have the wave down, and then we have sideways, wave up. The market moves in waves. So when you see a head and shoulder after a move like this, it adds the chances that this head and shoulder is going to work. When you have a move up and then you see a head and shoulder like this, yes, it's still okay, but you don't have the mean reversion on your side. The other thing here is we are in a range. That's the bottom of the range, that's the top of the range. So you are seeing a head and shoulder at the bottom of the range after the extended move down. Those things are amazing. So you had a lot of things on your side. It's like you have a lot of teammates playing with you, right? So you want to play soccer, it's 11 against 11, right? So imagine this is like you are playing with 11 against 8. You know, you have much more people on your side. You have more teammates on your side than on the other side, okay? How much time and how many trades do you think we need to do on a demo account to really master strategy and its risk reward? Great question. So I would say probably 100. I would just give like a random number. I think 100 is a good number. So after you're doing 100 trades on a demo account and you are profitable after 100 trades, I think, because what you want to do, you want to reduce I forgot the name now, the variance. Okay, you want to reduce the variance. So to reduce the variance, meaning you want to have the maximum amount of sample so that result is not biased. So for example, if I have only one sample trade, you're never gonna know if you're profitable or not, because it's just that trade. And let's say you won on that trade. It doesn't mean that you won on one trade that you're gonna be profitable for the rest of your life. But after you're trading 100 times, you're probably gonna have an idea if that strategy is good or not. Okay? If you do only 10 trades, it's a small sample size. It's not enough to know if that strategy is good or not. So I would say 100 to 200, 300, it's a good number. And if you're profitable after 100 trades, it means that the strategy is robust enough to go to a live environment. Okay? Yeah, so with that, you can basically just risk 1% per trade, okay? And just master all that 1% per trade sort of risk management strategy. Make sure your emotions are in bay, like make sure you're not feeling too stressed on risking money or risking 1% per trade. You're not upset when you lose on a trade, okay? Make sure you have all those fears in check. And once you master that, you can start doing what I'm showing you right now, which is basically risking more on a trade that has a higher chance of winning, like this beautiful head and shoulder here. So this long was a beautiful long and was much the chance of winning was much higher than the chance of losing, okay? And that's why the market moved up like this. Basically, in a very, if you go to a very short time frame, maybe a 5-minute chart, you're gonna see it was a very aggressive bar. Look the bar, very aggressive, okay? And it's not luck, okay? You don't need a crystal ball, and this is not luck. This is not like, oh, it happened because it had to happen, or because of news, or because, Israel and Iran. No, it's not because of that. is because of chart pattern and technical analysis. Okay, so this trade has a higher chance of winning, therefore you should bet bigger in here. You should go bigger in here. Okay, so that's basically it. All right, we've been here for half an hour. Any questions so far up to this moment? Because I also want to talk about one more thing, which I got from this amazing book called Trading in the Zone. I definitely recommend everyone to read. I read this book probably like 5 or 6 times. And here I'm going to talk about something that's crucial, which is let me summarize everything first so we can get to the final thoughts, which is risk management. What do you want to do? First, demo account. Okay, so first, demo account. Practice with fake money. Make sure you are profitable. Make sure your strategy works. Make sure your emotions are okay. Then you're gonna go to a small live account. Risk 1% per trade. Okay, so that's the second step. The first step, demo. Second step, small live account, risk 1% per trade. Once you pass that stage, 100 in the same time frame. Yeah. I would say, if you want a daily chart strategy, I would say probably 50 is so good. If you are in an intraday, like 1 hour, 4 hour, 15 minute, I would say 200, 100, it's okay. But 100, it's a good round number, rule of thumb that you can follow. The more the better, actually, but So once you go to the demo, you go to a small live account, risk 1% per trade, and then after that, you can start risking, and then you can start actually trading, for real, and say like, okay, now it's time for me to, give it a go, and let's see if I can be a profitable trader and make 6-7 figures trading. And to do that, you're not gonna make $1 million in a year. You're not gonna make $100,000, $200,000 in a year. I did not turn my $100 account into $200,000 in 2 years by risking 1% per trade. I had to risk 10, sometimes 15% in one single trade. And some people are gonna say, "Oh my God, that's too much. That's a lot of leverage. That's crazy." Yeah, but I was trading with a strategy that had a 90-95% chance of winning. So it's free money. Why shouldn't I risk? I should have actually risked much more than 10% on those setups, to be very honest. But once you don't do that, when you didn't master those 2 steps. If you haven't mastered those 2 steps, do not start trading and risking 10%, 15%, or using a lot of leverage in one single trade. Okay, first master those 2 steps. Once you master those 2 steps, you can start risking more in one single trade. For example, in a head and shoulder like this, I am not gonna risk 1% in this trade. I'm gonna risk more. I'm gonna use more leverage, and I'm gonna bet bigger, because I know that this move here after breaking this neckline, it's very, very likely. It's like 75 to 80% chance, maybe even more. Okay, so therefore I'm gonna be doing this trade with my eyes closed, take my money. I'll always do this trade happily. Like if I lose money on this trade, I will be the happiest person in the world, because I know if I do this trade 100 times, which I probably did already, I'll make money. So in this case here, there will be something that's gonna start sneak into your mind, which is the fear of losing money. Because when you start risking a lot of money, it can become tough, because you don't want to lose that amount of money. So when I had my $100 account, obviously the threshold was much smaller. But then once you start growing your account, let's say when I was with probably like a $10,000 to $20,000 account, some trades I was risking $1,000, and that was a lot of money for me back then. And I remember I would shake, my hands would start sweating, I would be like very stressed, my heart rate would increase because I didn't want to lose that amount of money. $1,000 was like a salary, a month's salary for me. So how do you overcome that? You overcome that by rating your setups. For example, a head and shoulder like this for me is an A. Therefore, the A I know has like a 80+% chance of winning. Okay? Then you have the B setups, which is those setups that they're okay, but they are around, 50 to like, 70% chance. Okay? 70% chance. And then you have the C setups, which has probably less, I think, or equal to 50%. Those C setups are setups that you want to get rid of. You don't want to trade them. You only want to trade the Bs and definitely the As. All right? So this setup here, obviously an A setup has around 80% chance of winning. Therefore, I'm going to risk much bigger on those. The Bs I'm going to risk much less. And the Cs are probably going to risk almost nothing to nothing. Okay? Once you are here on these A's, mentally are not going to be easy for you to manage that trade. It's going to be very stressful because you're going to be risking a lot of money and you're going to be afraid of losing that money. And the way to overcome that is to remember why you are putting so much money on the table right now. Just put a mantra in your head. You do some breathing exercises and you repeat to yourself, I'm not gonna get out of this position. I'm not gonna let the fear overpower my awareness. I'm not gonna let the emotions dictate my actions. I'm going to stay on this trade until it hits my profit target. And I'm gonna do that because I know this is an A setup. And I know if I do that 100 times, I'm gonna make money. And that's why I showed the trading the zone, because in here, there is a part here in this book that I love. And what is here? Really understanding risk. So it's page 61. And in here it says accepting the risks means accepting the consequences of your trades without emotional discomfort or fear. This means that you must learn how to think about trading and your relationship with the markets in such a way that the possibility of being wrong, losing, missing out, or leaving money on the table doesn't cause your mental defense mechanisms to kick in and take you out of the opportunity flow. So, it doesn't do you any good to take the risk of putting on a trade if you're afraid of the consequences, because your fears will act on your perception of information and your behavior in a way that you cause you to create the very experience you fear the most, the one you are trying to avoid. Okay? So I have a mantra in my trading desk which says, the fear of losing money actually makes me lose money. So the very fear of losing the money on that trade, it's what makes me get out of the trade. It all makes me mess with the trade, and I ended up losing money because I'm acting on the fear of losing money. So guys, a lot to take in. I know. Risk management is not an easy subject. That's why there is a very special module in my trading course where I only talk about this. And for me, it's one of the most important concepts in trading. But what I really want you to take away from today's class, today's webinar, is that if you just follow those strategies and those steps, I guarantee you're not gonna be losing a lot of money in trading, and possibly, depending on the trading strategy, you can start making a lot of money in trading. Okay, so there you have it, risk management. I hope you guys enjoy it. Yeah, I probably learned a lot with my biggest losing trades, because on those moments are the moments where you're either too greedy and ended up forgetting these basic concepts that I'm teaching you guys right now. You know, I remember one of my biggest losing trades was, I think, when was it? I think 1 year, 2 years ago. I think I lost like $20,000 in a couple of minutes, and it was an A setup, but I put so much money on that trade, I wasn't prepared to lose 20k or 10k, and the market it breaks and then start pulling back, and my stop loss is below this, and it gets so close to my stop loss that I say, you know what, instead of losing 20k, I'm just gonna lose 15k, and then I'm gonna save 5k. But then the market bounces back up, and then I have to buy again, and then the market does this again, and then I get out of the position, and then I buy back up, and so I ended up overall losing $20,000 just because I was afraid of losing that $20,000. And instead of making $50,000, which was my target, which I could have made 50k on that trade, I did not, because I didn't follow my plans. I listened to my fears. And what I'm sharing with you guys here is just basically probably what every trader experiences once in their career. So if you guys can just take this away from this class, it's gonna be amazing, and probably it's gonna save you a lot of money. Okay, if you follow those steps, demo account, then risk 1% per trade on a very small live account, then we go to this sort of rating your setups and risking more on those bets, on the good setups, and risking less on the bad setups. Okay, so for example, before you were risking 1% per trade on every single trade, this one you can risk 3%, this one you can risk 1.5%, and this one you can risk 0.2%. Okay, if you do that, I guarantee you're gonna multiply your trading account very fast, and at the same time preserving your capital. Okay, let me get rid of those drawings. Clean chart. All right, any questions? I think, yeah, it's been like nearly 15 minutes here. We talked about many things today, very important stuff actually. So if you guys have any questions, just let me know. I am about to call the day, and yeah, I think this was a great lesson. I hope you guys learned something and enjoyed these risk management concepts. All right, so looks like no questions, which is good. I hope everyone understands these concepts. And yeah, tomorrow at the same time, I'm gonna be jump on here on YouTube live. Gonna do the same thing, and tomorrow we're gonna talk about how to build a strategy that actually works. Because look guys, if you go here to, let's just Google, right, trading strategy, and you go to videos, every trading strategy explained 12 minutes. The only day trading strategy you ever need, bullshit. So the trading strategy that made him 153 millions, no, they're not gonna share that. The only day trading strategy I would use if I could start, BS. The only day trading strategy you ever need, BS. The proven 1 hour trading strategy, 85% win rate. Nah, BS. You know, like, yeah, like these strategies, they are definitely not that profitable, and they're definitely not simple. And I'm telling you right now, I spend hours and hours of my day researching trades, backtesting trading strategies, refining them, making sure they are profitable. And I'm not gonna share the secrets and that kind of strategies away for free. I'm doing here because I'm starting a community and I want to help the people that are joining first. But obviously, the more I grow the community and the more I grow my following, I'm going to start pulling back on those secrets. I'm not going to be sharing everything that I know because it's a lot of work, right? And we cannot just give them away like this, right? So, but tomorrow I'm going to share how I think about strategies and what's the best approach to create one that actually works. Okay, Rafael is saying everything explained very well, and I like the concept of categorization. Yes, you have a little bit more experience now, you know, so you can definitely start rating your setups. You know, from A, B to Z. This is a secret, guys. Like, people are not gonna be sharing those things. Like, again, like I showed you here on trading strategy, I show you here, like, people are not sharing those sort of ideas. Those 99% of those people here build a day trading strategy with me in 30 minutes. No. And then here he's like selling a course. Yes, I also sell a course, but I'm selling a course because I'm seeing so much of this BS that I'm like, man, someone needs to tell the truth, you know, to those to people. Like, trading is not that easy. You cannot build a profitable day trading strategy in 30 minutes. You take a lot more than 30 minutes, man. You have to backtest for many hours. So the proving 4-hour trading strategy with 85% win loss ratio, that's BS, total BS. So yeah, just make sure, like, you know, what I'm sharing with the guys is what made me profitable. So I'm being real, I'm being honest. It takes a lot of work, it takes a lot of dedication, discipline, mindset, you know. And on the risk management part, if you follow those steps, you should be fine. Hello, Kevin. What's up, my man? Thanks for joining us. Kevin is a trader at 365, which is a prop firm that my mentor owns. And yeah, Kevin's an amazing trader. Yeah, so basically, rate your setups, you know, once you understand all those concepts of demo trading, of trading 1% of your account, once you get past those basic steps, rate your setups and make sure you are betting big on the big opportunities and you are pulling back on the opportunities that don't pay off, okay? I'm gonna show you guys, just before I go, I'm just gonna show you guys the biggest trade of my career. Remember the head and shoulder I showed you guys before? So I'm gonna show you the head and shoulder here that I took. This was the biggest trade of my career. Come on, man. Let me go to 1 hour. That's the annoying part of being a free account. That now they're gonna be like saying, okay, all right, I'm not gonna go to the 1 hour. So this was the head and shoulder that I took. This is the neckline. See? And here on this trade, I went big, very big. Okay, and basically on this move down, I made a lot of money. So again, what's the probability of this trade working? I would say it's 90% plus. Why? Because again, as I show you guys, like we have the extension, so now it's more likely that the market will mean revert back, because the market it's very mean reverting. Okay, so you have that. You have also the resistance here. So you have all those sort of levels that was support and resistance. So the market resistance, high time frame resistance, very extended, former head and shoulder. Easy money trade. You know, I do that any time of the day, and they don't come very often. You know, this was in 2023. The one on Ethereum that I showed today was now, so they don't come very often. That's why when they come, you gotta go for it. So yeah, so that's how you're gonna grow your trading account from $100 to 200,000, 300,000, the same way I did. You know, you're not gonna be doing that by gambling away your money. You're not gonna be doing that by being silly and risking a lot in a trade that doesn't have 90 to 95% chance of winning. You know, so. And yeah, guys, I'm here to help you on this path, on this journey. So if you guys need any help, just let me know. We have a community on WhatsApp also that you can join for free. For those who are really beginner and wants to learn more about this, I have my trading course where I explain all these concepts. I explain strategies, risk management, everything. So I just went through like all these trading courses that these guys are selling, and I did something much better than that, you know, because those guys don't actually teach how to properly trade, because they are not real traders. And yeah, so they're not gonna share everything in the truth. All right, so that's it for me today. We chat a lot about risk management. Tomorrow is gonna be building a trading strategy, and I'll see you guys at the same time tomorrow. It was a good chat. Thanks everyone who joined us. Please hit that like button, helping me with the algorithm on YouTube. Subscribe to our channel if you haven't already, and I'll see you guys tomorrow.